Can everybody hear me? Okay. Yeah, so first, we'd like to thank Matt and Mike and the rest of the Marine Money team for putting together this fabulous event. It's, as always, they've outdone themselves. So I have the pleasure today of being able to interview Perry van Echtelt, the Chief Financial Officer of Hafnia Limited. And as the title of our session indicates, we're going to discuss Hafnia's capital markets journey. And so, Perry, thank you for joining us. And I think, Perry, where we could probably start is the current Hafnia Limited is the result of the 2019 merger between the BW Tankers and and Hafnia Tankers. And maybe we kick this off with a little bit of background insight into the pre-merger Hafnia and BW sides of the current group.
Yeah, thanks. And thanks for being here indeed. Obviously, our listing in April in the United States was quite visible, but if we look back at the 10 to 14 years history of the company, there's actually been quite a bit of capital raises and transactions that led to the company that we are today. Maybe running back first to 2010, that's where Hafnia Tankers had started, initially with a service model of pools. So in 2010, there was an MR pool created and an LR pool together with MOL and Mitsui as partners, even before the asset owning part of Hafnia had started. As that business grew, became more successful, added more vessels. Also, a few transactions led to the asset ownership of Hafnia. In 12 and 13, there were a few transactions involving private equity where the company had been acquiring handies, LR1s and MRs. That also led to the introduction of private equity into the shareholder base. There were, through a series of transactions, 5 private equity firms that came in. A total of just over $300 million was raised in those days. Barclays, Blackstone, Tufton, Oak Hill and Davison Kempner, if I have them all, were added to the shareholder base. And from there on, the company kept growing up until 2018. Handy Pool was created. The services model was expanded by starting a bunker alliance, basically providing services also for non-owned or non-pool vessels for our business. And in the meantime, also keeping an eye on the capital markets. So I think the companies on both sides have been looking at capital markets transactions, doing an IPO either in the US or in Norway. Then on the other side, there was BW Group. I think everybody knows the group. It's very active in energy transportation throughout various companies across. The first investments were done in 2006 in acquiring 17 LR1s. And in 2014, that business was basically spun out onto itself by acquiring more ships, and also there private equity came into the picture. So there was Pacific Alliance Group, PAG from Hong Kong, that became a roughly 1/3 shareholder in the company. From there further acquisitions or vessel acquisitions and TC-ins were done. There were 6 LR2s that were ordered in 2017. So that led both companies basically to come to a portfolio of roughly 40 ships each. And then, of course, Hafnia had the commercial angle with the pools. Then really the nexus of the merger was in 2018. We had seen dabbles into the capital markets for both companies. BW, as a shareholder of BW Tankers, or actually BW Pacific is what it was called back then, acquired a stake, a controlling stake in Hafnia Tankers. From there on, basically the process of the merger was kickstarted. Half a year later, early 2019, the merger was completed and ended up with basically the basis of the company that we see now in the stock exchange. Close to 90 vessels owned, another 75, 80 vessels in the pools. So large commercial setup, low cost base, good access to capital. We refinanced part of the debt. And that basically brought it to the company where it was early 19.
So you have this fabulous company. You've got a great management team. You've got the support of the BW Group. Seems like things are going pretty well. What were the key capital markets objectives, achievements of the company at that point?
Yeah, so in 19, we still had quite a bit of private equity into the shareholder base. As a company, we still felt that there was quite a bit of consolidation and growth to be done in our market. So to create both a liquidity venue for shareholders to be able to get a pricing, being able to sell shares, but also to get a currency for ourselves to either raise capital or use it for acquisitions. We felt it was a good time, also due to the size that we had. Back then it was a net asset value of close to $1 billion. I think it was $900 million, which is 5 years ago considered to be a sizable shipping company. So soon after the merger, of course, we've done the integration. There was work to be done on the balance sheet with some refinancing, etc. But in the summer of 2019, we basically started preparing for a listing. And then again, you start looking at, should we do a US listing? Should we do a Norway listing? Ultimately, we decided for Norway for a few reasons. There's a large investor community in Norway that is very familiar with shipping, the volatility, the various segments, etc. There was a familiarity with the BW Group name. There are a lot of analysts that are very good at following the stock. So at that moment in time was an obvious decision to go for a Norway listing. Maybe added, and even important element there is always the transaction structure. Shipping markets, I mean, now we're of course all in great markets, but shipping equity capital markets, the windows open and close relatively fast. So in terms of timing the market, relative to NAV is the sufficient shipping appetite. We opted for a structure where we would do, of course, you go to a roadshow, you go to investors, but it's technically private placement. And then almost immediately after that, you do a direct listing on the what's called the Oslo Stock Exchange. So you get a listing, but the process in itself was a private placement. So we did. It was in hindsight an old-fashioned roadshow, flying to the Nordics, continental Europe, London, US, etc. That was all done in October, and ultimately did a transaction where we raised $75 million for the company and did a secondary placement of around $150 million. That all went well. Ultimately, we got a listing on Oslo Access on the 8th of November, and that was basically the initial step into the Norwegian capital markets. There was an existing OTC registration in Norway, but there's very limited trading there, so that automatically folds when you do a transaction there. So, and then of course, it's already 5 years ago, so 2 months after doing the transaction, you go for Christmas, you come back, and then the world starts going into lockup due to COVID. So also looking in hindsight, I think the timing for always is important to look at time to market, how fast you can do a transaction, because the years after would have been very difficult, where the shipping markets were volatility in the markets to do a transaction as close to NAV as we did back then in 19. It took. So if you do an access listing, there's a few conditions before you get to the main board listing, mainly the number of shareholders that you have in the books. That all panned out, I think, on late April, early May the next year. We had a full main board listing in Oslo. Then, of course, COVID had started, volatile markets. We still had, obviously, a clear strategy of further growing the business. That led, without going into too much details of the transaction itself, but we closed early 22 a transaction with Chemical Tankers International. It's a modern, strong fleet of chemical, MR, and handy vessels that we acquired from Oaktree. The interesting thing about the transaction was it was tough markets at the moment, but we agreed on a deal where we would value the fleets on a NAV-to-NAV basis vis-a-vis each other, so basically irregardless of where the pricing in the stock markets is. And obviously for Oaktree, who was the largest shareholder in that setup, buying into the story of Hafnia having a liquid stock and being able to sell down afterwards. So early 22, we issued around 20% shares to Oaktree. In the meantime, we also acquired 12 more LR1s. So early 22, we had an acquisition program of just over $1.5 billion in 44 ships that were added to our fleet. Then again, those were tough markets. So we weren't in the strong freight markets that we see now. So we had also lined up, and that's also where the banks come in. So it's important to have strong relationships there, that we had additional runway, even if the if the tough market of 21 that we had seen would continue into 22 or even later. Obviously, the market turned earlier, and therefore we also did a capital raise of $100 million, well, to take a little bit of the leverage out of the balance sheet. We were comfortable with it, but it also shows that if you do a $100 million capital raise, it brings new shares into the trading, because the free float was relatively small. We had 2 large shareholders in the setup. So that's, with an improving market, really gave a spike to the trading in itself relatively. So that also Oaktree had been able to sell down within a year to below 5%. So that was, in a short or a longer story, basically the Oslo trajectory.
Right. So it looks like everything's going, again, extremely well, going through 2022. You're working with the team. What are you thinking about when you make this decision? You know, as well as things are going now, maybe we should add a secondary listing in the United States. What was sort of the key factors there? Were they Hafnia specific? Were they more market general? What were you guys thinking about?
Yeah, so I think it's a bit of both. So obviously the markets were strong, so more appetite. Also out of the Norwegian Stock Exchange, there was more interest from US investors. Our market cap had been growing from, was it around $1 billion with the initial IPO to, was it roughly $3 billion last year. So you're also having a bigger size in considering a listing in the US. Obviously strong market, so we've been reducing our leverage quite a bit, became more of also a yield perspective. We think that as we brought down the leverage, we also increased the dividend policy. So normally we pay 50% of net profit, and we changed that to a structure where the lower the net LTV of the company, the higher the payout ratio. So you have capital distributions to the banks and to the shareholders go hand in hand. And it also meant that we felt there was more appetite from the US markets in a dividend-paying stock as well. Initially in 23, we did an OTC registration as well. We've seen a few other companies doing that as well. It's a very low hurdle project. I mean, you've been involved. It's a registration. You still fall under the regulatory requirements in your home country, but at least you have a US trading hours, US dollar quotation of the stock, which is another element that the Norwegian kroner was not always helping there. But still, after that, we saw that the gap between shipping companies listed in the United States, in New York Stock Exchange or NASDAQ versus Norway, there was a big gap. And also because we didn't need capital, so we were basically looking at a structure that we would do a direct listing rather than going for a capital raise where the process is a bit more cumbersome. You have to wait for the right window in the market. So therefore, last summer we discussed and agreed with the board that we would start preparing for a US listing. Right.
So you make this decision.
Yep.
What'd you do? I mean, you've got a big project ahead of you. You've got to organize all this. I mean, I'm sure there are other people out here considering it. Do you have any tips or advice for people who are looking at this? What's the process like?
I'll start with good counsel, I would say. Well, that aside, it's important to get a good view of what the timetable is, what you need to be done, what is the good timing vis-a-vis your own earnings. Because in an IPO, you're private and you go to public, which is more binary. Now you have to take into account your own earnings releases and the whole schedule as well. Prepare the internal team. Especially if you don't do a capital raise, it's much more about the filing and the legal aspects, and not to be mentioned, or specifically to be mentioned, the audit that you have to do as well. So the process that you do, if you do a direct listing, you don't have to do a prospectus. You file a document called a 20F. It's going forward your annual report, but the initial 20F is a document that describes the business, the risk factors of the company, the market, etc., including 3 years of re-audit of your financials, but then according to the PCAOB standards. And PCAOB is the Public Companies Accounting Oversight Board that is governed by, I think it's the SEC, and that basically looks at all the accounting and the audit of companies listed in the US. And that is a long and lengthy process. You have to make sure that the team internally is prepared. A lot of the finance people and legal, but also other people in the company have to do that basically next to their day job.
Yeah, so one thing to note, Hafnia didn't qualify as an emerging growth company, so they had more than $1.2 billion in revenue. If you're an emerging growth company, you only have to do 2 years of financials, which is a big time and expense savings as part of this process. So Perry, you've done the 20F, you've registered the class of shares that's going to be issued here. You've done all the work with the NYSE. What's it like? So I mean, are there a lot of additional hurdles in your daily life? I mean, you have to file your annual report, but you don't have to file quarterly reports. Only to the extent you file them outside the U.S., you put them on 6K.
Yeah.
So what are the big things that, as a new public company in the United States, you're having to address?
Well, maybe first on the timing when we went back. So we started with lining up the advisors last summer. Did I think the first filing of the document around Christmas. So it takes about half a year to get there, 5 months. And then before you get to the listing, that's another 3 months. We did the listing just after Easter in April. Most of the disclosures that you do, you can basically adopt or keep adopting what you do in your home country or your primary listing in Oslo. There's a few additions. You have to file an audit committee charter. There's clawback policies and shareholder registrations that you need to take care of. But that is, I think, all quite manageable. As you said, you don't have to report more often. There's more of an US or SEC wrapper that you do around the quarterly financials. So that is not the biggest change. Going forward, of course, the audit is a little bit different. And after you do the listing, you'll have to comply with the SOX standards as well, so Sarbanes-Oxley, which is, well, depending on the type of the issuer that you are, but you know that better, you get a grace period, and then for the financials of 2025, will have to be Sarbanes-Oxley compliant, which it's not a project where you have to document a lot of your processes and controls and your risk management, which I think is a good thing for a company to go through that process. But that is basically after the listing that you have to take into account.
I think that raises a good point, which is that the U.S. capital markets are very, there's a lot of accommodations made for foreign private issuers to incentivize them to list in the United States. Yeah. And so, for example, with respect to corporate governance, for the most part, other than audit committee independence, you can, as long as you disclose differences, comply with home country corporate governance standards, exactly, as opposed to changing everything to comply with the U.S. standards. So we're kind of running out of time here, but I'm just wondering, Perry, it's only been a month or two?
Yeah,
a couple months actually.
Yeah.
What are the takeaways from the list being a public company here in the U.S.?
Well, so the 9th of April, we had our listing. The day in itself, I mean, it's a big event. You were there. It's the stock exchange really makes it a big marketing event. It's not a thing that you're really spending a lot of time on beforehand, but it's, I think, for our employees, the people that have been working on it, our advisors, we had clients and bankers coming over. It's a big event, and that's nice to celebrate. Of course, it's a big milestone as a company to get this done. But that is on the day itself. It's great, and then you go into the trading. As mentioned, we didn't raise capital, so if you combine this with doing $50 or $100 million capital raise, and of course you're injecting shares into the US capital markets, you immediately would have more share trading. But the overall feedback has been quite good. We see different type of investors now that we normally wouldn't automatically see, because for them either we're more visible or it's easy to trade in the US capital market, etc. So we definitely already see the broadening of the investor base. We're now 20, 25, 30%, depending on the day, of overall trading, which is, I think, more than we had initially expected. Of course, it's only 2 months. We're going into summer period, but we definitely expect the trading in the US to improve further. So from there, you have the reporting. We'll definitely put more effort into investor relations also in the US. There's not only New York, but also other pockets of investors to go to. And I think it's really good to have both in line. So we have a strong investor base in Norway, which has been beneficial for the company. And now we see a broader investment base that makes it easier, although you don't need the capital now, that if you have more liquidity, you have more trading around the valuation, etc., that should you need more capital or use the equity as a currency, have a better currency to work with. So all in all, good experience.
Good experience.
Yes.
Right.
Yeah,
Well, good.
absolutely.
Well, I think that that actually concludes our time. But thank you very much, Perry. I appreciate it.
Yeah, you too. Thank you.